Welcome traders, and thank you for joining me. And we are going to do a weekly review starting with all the main indices, and quite some sell on Friday. So it took us 4 days to get up that far, a couple hundred points, and one day to do about 230 points. So that's why seasoned traders like bear markets. And if you had your charts lined up, you would have seen this resistance area here. If you're a day trader, that is. I mean, if you're a swing trader, that was tough because you had a lot of blue bars in front of you. And with non-farm payroll, it can be you get really wild gyrations. And this could have gone either way. This could have flown up to even 17,000. Who knows? But so we went right up to that top. Probably got caught a lot of bears out who had some orders up there for well, some orders here for shorts. Probably stopped a few out, and then they dragged it right the way down. Now, what I don't want to do is, I mean, yes, it's very bearish on even the Nasdaq. It came off at that resistance level. You know, that was blue, nice and blue until we got to Thursday. So the signs were more obvious on the Nasdaq, and that's dropped to below this support level. However, we are holding this fib level. So to keep it simple, it's bearish. Obviously, it's bearish. But to add to complications, you just watch how we sell here. We have a sell signal here. We engulf the previous day's bar, and all we do is pull back to 50 EMA and go up. We sold here into support level, and we spent the next 2 days moving up. A couple of days of selling here into support level, and then we get a big move up. So yes, we're bearish. The Nasdaq is particularly weak. I will be shorting up here. I will be shorting 530. So pull back to Wednesday's low, 16,530. But just be wary. If you're swing trading, you have to you stop right up there. Let me see what that level is. That is, you're gonna have to go 16,660 if you're gonna short at 520. Otherwise, as a day trader, I will be waiting till the Dow opens. Won't be doing anything Monday morning UK time. Wait till the Dow opens and see if we get up that level, if we're going to hold. If we get reversal signals up here, then I will short and set targets to 16,300, 200, 16,000, and so on. So a word of caution: don't get all bearish. Don't load your boots up with shorts, only to see this sort of float sideways, potentially drift up. Now, the one aspect of the sell on Friday that concerns me is that US dollar was, that's US dollar Swissy, US dollar was not that strong. Now, in my years and my experience of trading, if you get a flee to the safe havens and away from assets such as stocks and of course the indices, then ordinarily you would expect the US dollar to get bought. That's the traditional relationship in markets. This is US dollar CAD, which I actually went long here, held it for a couple of days, and then we just looked as if we were going to hold this area here, but we dropped it, dropped 110, and here we are back down support. So I'm leaving this for now and standing aside. This is my concern with the market, that the dollar is weak. So it's not the traditional relationship. And that's borne out in the gold. This is seasonally, gold typically drops until you get to about July, mid to late July. Normally I expect it to continue to get eked down until July, possibly This is just a scenario, not my prediction. And then at this point start to wind its way up into the Indian wedding season into October, November. So yes, again, just as the Dow has put in a nice big seller's bar, the gold has put in a good buyer's bar. So you're going to pull back to this level here. It is potentially a long, 13,000 or 1295 area. But look at all these moving averages you've got above you. So if all we do is crash into that and roll over, and we fade these moving averages, the first test of these moving averages is normally a weakness. If we fade these moving averages, we could start to drop over. But we're above a trend line, there's a big buyer's bar, and the pullback is buyable if you are prepared to get stopped out under 1281. So only go take that long if you're prepared to get stopped out. If you're not prepared to get stopped out, stand aside. Right, yen pairs, pound yen came right back down to support, and the euro yen got close to the 50 EMA. But we got huge resistance at 143.32, huge support at 1400. So the yen pair I'm suggesting you might want to look at is we've got Aussie jobs second half of the week, and this is at a major resistance level with a star and an RSI setup, and it's a close stop. So I am going to try and hold out. I'm going to hold out for a short back to this resistance level here with a stop at the highs to see if that can at least roll over to 93 and possibly, who knows, maybe even a lot lower. So my entry is 96.22 or 96.20, and my stop is very close at 96.60. You can see there's massive support at 93.60 area. Again, took a long time to get up there. If that sells, we could come down, could be right back down to 96.50 area or lower within the week, back end of the week. But I'm just looking ahead to Aussie jobs. The other ones I like, so I'm not touching the pound US at the moment. A lot of support underneath, a lot of resistance above. I think that's a tough call. So I'm just standing aside from that one. The euro, I think, is probably a safer short. No such thing as a safe trade, but it's safer. So I would look to short that at 137.50 area to see if we come right way down to 135. And Euro CAD, we've already come a long way to the downside, but I would try and short at 150.85 to see if we can get right back down to 164. Broken the trend line, already had a long period of selling from 15 and 155 area, 156. So with 550 points down from that drop already with low RSI, so I'd sit there, and even, I mean, by far the better entry will be a short at 151.26. But I'm not keen on the euro yen and the pound yen to short before I forget, because of the support they're on. But they are, they are very bearish bars, and they are potentially shortable. And that pound yen, another touch of that trend line could just give. Who knows? I'm interested in 170. I think I will. I'm going to hold out. Got GDP. I think it's middle of the week. UK GDP middle of the week. If that comes down to 170 and holds, the big magic number, that could bust through 173 and go and visit 177. So I am going to put that area there on my target list and see how we handle that before I start getting very short on that. Right, and just want to finish with a few commodities. Oil, nice couple of days in the buying bars. We got a lot of a retest of the star up there and the trend line we got up there. I think we will get to the top of this box. The contract runs out, or closes I should say, on around about the 20th. There's not long to go on this May contract, so if you're in that, I would potentially shorten your targets to these levels here, particularly the higher that box. If you're interested in getting in this before this contract runs out, then 150, 140 area could potentially hold. The grains I like are the wheat. I'm going to try and hold out for 667 to see if we can get up to $7.50 up there. But I'm not as keen on the corn because I have to buy higher, and the beans are flailing around and could come up down to 14.45. Otherwise you're going to have to buy high. So I like the wheat. The sugar, let's turn to a 60-minute chart on the sugar, because I mean, it could potentially hold here. You can see $17.10 is a massive support area. So we shot up to the 2 EMA and sold. But if 17.20 holds, if you're interested in sugar, then that could work its way back up to these highs and potentially, retest some of these highs. Could break through. Alright, I will do a detailed stock video on Monday morning before the US market opens. Otherwise, please enjoy the rest of your weekend. Thank you very much for listening, and your comments will be very welcome.